Good morning, everyone, and welcome to the European crossover webinar. And we've seen the Aussie dollar take a dip. We actually took out the 69 cents, is trying to cover just a bit above that. And we're going to move into, and the cable continues to remain under quite a bit of pressure here. See right here, Canadian dollar finally did go on and slide back. Remember, we've been talking about this 35 cents and they haven't been able to get above that, and I said, well, that's just going to be the resistance at this point. But we finally succumb after hanging over there. We've been thinking at the beginning of the week that we were going to move lower. We finally have moved lower, did come into support, and that held here. But we did go on and finally start to pair back here. Euro came off of that with the talk about the not imposing the tariffs on autos, and we'll go in and get to that. Dollar index did make it up to our bias chart resistance. We talked about that. Right here, here's 97.69 bias chart resistance, made it right up here to 97.70, so not bad, off about a tick. And dollar yen just continues to stay. We dipped a little bit. We're just kind of hanging around here. It's been relatively quiet. Although the S&P's rallied, the Jap dollar yen did not respond very much at all. And we'll go and take a look here on the cross rates. You can see here that the euro odd made up in here. Remember, we had our bias chart resistance at 62.35. We did make it up as high as 62.51, and now we've come off quite a bit from that area. But remember here with the euro odd, we talked about this 62 even, and the market would want to take out the 62. And the 62.23 was a 61%, but we had a level. Remember, that's where we're coming up with that right in there. There we go, right there. You see, and that was at 62.35 that we've been mentioning. As I said, euro odd been in solid buy mode. We'll sidestep for 62, confluence for 62.23. So our little stretch area was 62.35. We made it up to 62.51, and we'll see what we can do here at this point. I'll try to make a stand here. And cable continues to stay relatively weak here. ASEAN took its dip here. But we're going to move into the news and also what economic events that we have. Just that Italian CPI just going to come out, and that's going to pretty much cover it until we get into the U.S. session. We do get building permits and housing starts, as well as initial jobless claims. We also get Philly Fed business index. Last month was 8.5. They're looking for 9.0. And we also get Canadian manufacturing sales. So let's see what we have on tap. Time trickling away from UK's May. PMA will again face calls from senior conservatives to set a clear date for a departure at a meeting of the party's so-called 1922 committee later today. She's expected to tell them she aims to get Brexit done and dusted in early June, with a last-ditch attempt to get the EU withdrawal bill through Parliament, with Eurosceptics in her own party and her Northern Irish allies in the DUP questioning what exactly has changed to that bill to make them back at this time. The spotlight is on Labour's stance. Labour's Foreign Affairs spokeswoman Emily Thornberry last night knocked down speculation that the party might ultimately abstain in the vote, insisting it would reject it outright. If she is right, May's days in power are numbered. The damage done to the EU-sponsored net round nuclear deal by the U.S. decision to walk away. We're not going to I don't want to get into all those politics things. Let's go into the market. The to and fro of the trade war news continues to dominate macro market timing. Thinking with Washington decision to blacklist Chinese telecoms giant Huawei with the latest incendiary move, unnerving Asian markets again overnight. While anxiety grew above Asians' gigantic holdings of U.S. Treasury bonds, as well as surprisingly weak April retail data from both the U.S. and China, the Huawei news reversed a brief bounce in the market sentiment on Wednesday after reports that the White House has postponed its decision on planned auto tariffs for 6 months while it sorted out its bilateral issues with China, a move of particular relief to European markets facing a European Parliament elections next week and a new commission in October. Shanghai and Hong Kong stock markets with one eye on further domestic policy stimulus after this week's poor retail and industrial numbers stalled on Thursday. Japan's Nikkei lost 0.6%. And the all-country world equity index was in the red. China's offshore yuan weakened, though it remained off the year's low set earlier in the week. China's economic surprise index had plunged back into negative territory for the first time since March. Ongoing jitters about whether China will use more than $1 trillion of U.S. government bond holdings as a weapon in escalating trade war have gone up a notch after a dismal 10-year Treasury auction last week. And data on Wednesday showed Beijing had already offloaded its most Treasury bonds almost 2.5 years in March, well before the last ratcheting up of trade tensions. The disappointed U.S. retail numbers saw U.S. two-year yields hit their lowest in 15 months on Wednesday before rebounding on the auto tariff delay. In European debt, German Bunds steady just above 2.5-year lows on Wednesday. Italian sovereign bond yields and their spread over Germany continue to probe their highest levels of the year meantime. Because we all know about the issues with the Italian debt, and which has sparked that spread and has actually allowed for the Bund to go on and move lower in as far as rates. Moving on, the Australian dollar mauled as bears bet on June rate cut. The Australian dollar skidded to 4-month lows on Thursday as data showed an unwelcome rise in the jobless rate and narrowed the odds for a cut in interest rates, perhaps as early as June. The damage was done when data showed Australia's jobless rate rose to 5.2% in April, above forecasts of 5.1% and up from 4.9% the previous 2 months. The rise came even though the economy generated a strong 28,400 jobs in the month, with more people seeking work. That was a clear sign there was plenty of spare capacity in the labor market. Just this month, the RBA emphasizes the labor market needed to keep tightening its wages and inflation were to rise as hoped. Job growth needs to be fast enough to push the unemployment rate lower to keep the RBA from cutting rates, says Kenny Craig. According to the RBA's own estimate, a 5% employment rate won't see the inflation rate return to the target range and prevent a cut. A few months of data will need to discern a trend, leaving the RBA on track for an August cut. The market is wagering it might even come earlier than that. And on to the general Forex. Euro and yen stayed against the dollar on Thursday after U.S. officials said President Trump was expected to delay impending tariffs on imported cars and parts by 6 months to give trade negotiators more time. The euro was 1/10% higher at 12.08, having bounced back overnight from a 1-week low of 11.78. Long-term prospects for the euro are not particularly bright given the region's soft economic fundamentals, but the news on the auto tariff delay is helping the euro establish a support at the 12 even threshold. Kayosuke Suzuki, director of FX Societe Generale in Tokyo, said the uncertainty stemming from the escalation in the Sino-US trade war was weighing on the dollar. The greenback had retreated from a low of 9.15 against the safe haven yen on Wednesday as U.S. yields slid on weak U.S. April retail sales and industrial output data. Dollar index against a basket of 6 major currencies was nearly flat at 97 $1.54. And we already mentioned about the Aussie dollar here. And with that, we're going to move into the analysis. You can see here the Aussie continues to try and push up a little bit. Key is going to be the 69.18 right here. If we can hold above it on a 2-hour, you can see that right there. If we can, we bumped up, we did back, and we'll see what we can do on that. Well, here in the euro dollar, we had 11.75 for support. The low was 11.78 with our resistance. Still key resistance remains 12.62. I don't see any changes here. That 11.75 is still going to remain in check for support. Here's on the daily. So it's 11.75 that we're looking at here on the bias chart for support. No changes. We did go on a rebound off of the news with the tariffs. So that still remains the same. 1262 is up there on the upside. Seems a bit of a stretch here, but if the dollar, look, all this in between is just a lot of, I don't want to say noise. You can make the case or say, oh, well, resistance is going to be right there at 1230. Yeah, for a short haul, but like, you know, let's say that we get some news and the dollar starts sliding back. Once again, where the rubber meets the road is going to be 1262. There's no changes there. That still remains the same up there. So no changes here in the euro. Let's go and move on to cable. Well, we're coming into some support here at this 28.25. We're looking on the daily chart right here. It kind of bounced a bit off that previously, but it's been so weak and everything, and there's just no let up. I myself tried to pick it up, and I get stopped out for about, oh, was it a 14 pip loss? But and that's right before they announced the tariffs, and it popped right back up. And I was looking, I thought to myself, I go, well, I was showing, I think I had 28.20 on a 2-hour chart. And I said, well, look, if it slides there, I can always get back in. I didn't want to just let it ride a little bit longer, but obviously if I would have, it turned around and just bounced right back. But that being said, if we were to dip a little bit lower in here, takes us actually to 28 even, and there's some good levels right there. You see these touches right here at 28 even. Now this 28.25 is fairly key. It is. But we can dip a little bit further, so hang on. I'll just call it 28.01. Resistance comes in right there, 29.29. Take a look here on a daily. I mean a 2-hour. Well, you can make the case right here at this 28.89 right there. So we'll have that for our resistance. 29.29, push it up if we really get a good bounce. But initially, we'll go with the 28.89 then. Moving into the Aussie dollar, we had 69 cents that we were looking at. We're trying to hold this area. So we're going to keep that 69 cents. We got as low as what? 68.92, and we've recovered right back. Not a whole lot, but we've tried to recover here. So we're going to retain the 69 cents. We'll take a look at it here on the 2-hour chart. We have to get a little bit more room than that. That's not even much. Right there, 69.43. 69.43 will be initial resistance on this. Kiwi, we had the 65.17. We didn't even breach that. So it's actually holding up very well, but we'll keep that 65.17 in place. And the resistance, we're going to go and keep this here. We had 66.16, which is running here. We've got this dip up here, still waiting here, but you see it right there, 66.16. But the Kiwi is holding up fairly well, but there will be no changes on the Kiwi. Moving on to the Canadian dollar, we finally saw this thing start to slip. And we're just breaching our support here that we had from yesterday, which it did hold. We did go in and hold. We bounced back up just above 50 and started to slide back down. So we talked about this. It's been holding here, and whether or not this market was going to end up trying to take out that 35. And we've said, it had all the opportunities. Actually, I thought this market would have slid before, but we finally now started to succumb here on the Aussie dollar. Looking for support now and reassessing our resistance. Resistance is going to be right there at 34.61. And we'll look for support coming in. Eventually move down here to 33.91 for initial. And let's take a look here with the peso. Well, the peso, it broke above this trend line and is just not having any luck now. We've turned around and slid right back down to this trend line. Obviously, the risk aversion. What I've noticed here with the peso, it's, I mean, the wheels act like they really have to come off the caboose before it really wants to move. It moves, but it's quick to give up the gains. And I think also another thing that hurt this market is if you look here on the 2-hour chart, we had this trend line. Once they broke that trend line here, it really put anybody that was bullish under a lot of pressure. And so any kind of rallies were just being sold into this market. So that really put the pressure on this for this market to push downward here. So now looking for support. Well, this is fairly key right in here. We're going to stay, we'll go with where they went to, which is 1901. Could they push lower? They could, but they've done pretty good amount of damage. Other than right here, 19 even. That's about the only thing I'm seeing here. If they want to test it a little bit further. Right there. So we're just saying 19 even. Resistance, well, you can see where they're having trouble right here. Resistance is just a touch higher at 19.086. Right there. And at this point now, we have to say this has moved into a range. Can't say it's bullish. Now the dollar cat is still bullish, but we have to say the dollar peso is now range. I'll have to defend that to reestablish it. It's gonna be a little bit tough at this point. Let's go on now to the dollar yen. Well, we had our support here on the day at 927, the pivot, and we tried to dip a little bit below that. We're looking on the daily chart now, but you can see that that 927 has been holding relatively well. It hasn't rebounded much. I mean, we talked about, okay, be a great short if we can make it up to 989, but despite what's happened in the S&Ps, the dollar yen has pretty much ignored it. 927, the pivot for right now is still going to be the same. I guess once again, if the S&Ps do break, it's certainly open to moving lower now. I mean, because like I said, it will only respond to the upside. So, and we've kind of had a chance to settle ourselves or take a little bit that oversoldness out of the market and absorb it. And now we're seeing that the market won't rebound much on equity strength. So now we open the door for us to move lower. But for right now, that 927 is still holding up unless we see these equities start to go in and break. Resistance. Well, if they can punch up in here, we're actually just going to lower this a little bit more, but maybe we can goose some stops. But so far, it certainly doesn't look like it would hit that way, but it'd be 982. And onto the cash dollar index. We're seeing the Aussie dollar move up in here. Now, right now, this is almost a bit like a little bit of a spinning top, but the market's losing a little bit of momentum. Remember, we had our resistance at 97.69 and we got up to 97.70. I mean, yeah, 97.69, we got up to 97.70. And the dollar's held up well, but it certainly, I think that it's still open to going and move lower. Like I said at the beginning of the week, I don't think the dollar's going to fall out of bed, but I think that we can work lower. And I think that that's probably finding less and less reasons to hold this thing. So resistance is still going to be that 97.69. And you can see here we have a little bit of a downtrend line here. And support, at least initially, being 97.21. You can see that right there. No changes there. Let's go move into the cross rates. There's been no real changes here with the Kiwi yen. 71.45 still, and we're actually trying to push up a little bit beyond that now. And 72.50 up in here. We're starting to make a hold here. Yeah, it's still going to remain up here in 72.50. We're starting to see this Aussie trying to move up a little bit back, and we're seeing the Euro Aussie pair back in just a little bit in here. Let's go and move into the Euro Yen. Certainly we saw a pretty good little dip down here, and the Euro down here, and just took out 22. We had here for our support 22.26. Got down as low as 22.09. That just moves just about 3 notches lower, but we're starting to work up a little bit higher from here. Right there, that we had 22.26 is just a notch right there, 22. So 22.22, just a notch lower, not much at all. So that held. It did go as low as 9. And on the upside, yeah, no change right here. It's going to be the 23.27. Trying to hold this little base in here at this 22.60. That'll be important here. We'll have to watch this over the next couple of days here, see if we can defend this area here, try and make a stand. And on to the Euro odd. And we've talked about this quite a bit this week. And so we talked about this getting up to 62 cents, making that move, going here to 62.23 because we thought that 62.23, the 61% would work like a magnet. And we had a stretch level here at 62.35. We did get up to 51, and we've since trying to work a little bit lower. We're actually opening it up to ourselves to maybe form a little bit of a, we'll see how this plays out. The wick would be too long for shooting star, but if we finish the day a little bit lower, it could come up in like almost like a gray star doji. Aussie definitely trying to make a stand here. Resistance at this point, see 62.16. We'll take a look at it on a 30. Yeah, 62.17. That'll be resistance. Well, we get a 30-minute close above 62.17. This could be some resistance there. Support. Be 61.57. And looking at here at the Euro Kiwi. We had a resistance here at 71.50 with support at 70.28. That 70.28 is still going to hold. Doesn't look like we'll make it up to the 71.50 now, as Aussie's still trying to move a little bit higher up in here. Look at that. Aussie Dollar is still moving up. Gonna find a little bit of resistance where we're at right now at 65.82. So about just a little bit higher. Resistance would now, and generally I don't go with that, but it will here because now we're starting to try and put in that low. It's going to be right there at that high. It's going to be 71.23. And let's take a look at the Aussie yen. Trying to make a stab here. Support right now is going to be right there. 75.62. And resistance. There's some resistance before, but we're going to give a little bit of leeway. If we do get a little bit of short covering, which is going to come in right there, 76.40. Oh, we already had it 42. We'll keep that there then. And on to the sterling yen. Trying to make a hold here. We're actually going to right there, right off that low. 40.22. And at least for now, growth resistance right there. 41.31. And lastly, on to sterling odd. And we'll go with this support here. Keep it tight, 84.83. It'll be 86.13 if we get a bounce. Well, for right now, let's do a little bit of a bounce. It's going to be 85.80 on a very short-term basis. Okay, and there goes the bias chart. Some of the range has been pretty tight, so I mean, haven't been a big change, so not a lot that we're seeing here. We are seeing the euro odd continue to weaken a bit here, but if you look at the Aussie dollar, it's going to run into some resistance here around 65.82. So we may find this market trying to hold right in this area here, but I'll go and get that bias chart posted. And thanks for joining us here on the European crossover.